Welcome to XM.com for the Daily Market Comment for Friday, December 10th by Raf Boyajian. I'm Cristina Marujos. After making a strong recovery this week, risk appetite is being tested as the all-important inflation test looms for the markets. The US Consumer Price Index is due at 1:30 GMT, and the forecasts are pointing to another big jump in November. If the annual CPI rate hits 6.8% as expected, the Fed will be inclined to speed up the winding down of its asset purchase program. But it's not just about inflation. The labor market is also running hot, and weekly jobless claims were at their lowest since 1969 last week. The Fed holds its final meeting of the year next week, and markets are bracing not only for a quicker exit from QE, but also a steeper dot plot with an earlier liftoff date. Short-dated Treasury yields continue to climb today, supporting the US dollar, which had come under pressure earlier in the week as fears about the Omicron variant subsided. However, the threat from Omicron has not completely dissipated, and this reality check is likely contributing to slight dampening in the mood on Friday. For equity markets, there is a bit of profit-taking occurring as well after Wall Street recorded 3 days of solid gains. The S&P 500 slipped 0.7%, mainly dragged lower by tech shares as the Dow Jones closed flat. In Asia, traders also had to contend with more bad news coming out of China's embattled real estate sector. Property giant Evergrande and smaller rival Kaisa both missed their dollar bond repayments, with Fitch Ratings downgrading them to restricted default rating. Hong Kong's Hang Seng Index slid just over 1%, but the wider fallout appeared to be minimal. European shares followed their Asian counterparts lower, but US stock futures turned slightly positive. In the currency markets, the euro succumbed to the stronger dollar, dropping back below $1.13. The coming week will likely be a struggle for the single currency as the European Central Bank and Fed go ahead. The pound regained some footing but was unable to make much headway above $1.32, following some disappointing GDP figures out of the United Kingdom today. The data has further dashed expectations that the Bank of England will raise interest rates next week. This was the Daily Market Comment here at XM.com. Have a great weekend.